Welcome to the deep dive. Today we're tearing into a company that sparked some of the wildest debates on Wall Street. Strategy, formerly MicroStrategy,
Yeah.
trading as MSTR.
Yeah.
Is it truly a visionary, charting a new course for corporate finance? Or, let's be honest, just a high-stakes bet on one incredibly volatile asset?
That's the core question, isn't it?
Exactly. And by the end of this deep dive, you'll have a crystal clear picture of why its current market price commands such a staggering premium over its underlying assets and what that truly signals for its future. Our mission today is to dissect Strategy's, fascinating dual business model, its unconventional leadership, its financial health, and perhaps most importantly, how the market truly perceives it. All the data, financial metrics, and market indicators we'll be exploring are current as of July 14th, 2025. We're using a closing share price of $434.58 from July 11, 2025.
Okay, good baseline.
It's a story of corporate transformation, unlike many others, and we're here to guide you through every layer. Okay, let's unpack this. Let's jump right into Chapter 1. Business analysis. The software company and the Bitcoin Treasury.
Let's do it.
This company officially rebranded from MicroStrategy to Strategy back in February 2025, a move that really solidifies its profound strategic shift and, dual focus.
Yeah.
So what exactly is this dual business model they're operating with now?
Strategy truly stands on two distinct, almost contradictory legs. First, you have its original enterprise software business, founded way back in 1989.
Right, the legacy business.
Exactly. This side provides cloud-native, AI-powered analytics software globally. Most of its revenue comes from software licensing and cloud subscriptions, particularly in the U.S.
But here's where it gets really interesting, the part that's captured everyone's attention. Its second business, the Bitcoin development and treasury business, what is this whole new venture about?
This kicked off in August 2020. That's when Strategy made a profound pivot, deciding to acquire and hold Bitcoin as its primary treasury reserve asset.
Okay.
It's not about traditional software revenue here. It's a pure capital appreciation strategy. The company's value is now directly tied to Bitcoin's market value. Some observers, quite provocatively, even call it a perpetual dilution machine.
A perpetual dilution machine. Wow, explain that.
Well, the idea is they leverage their high stock premium to issue debt and equity, essentially, just to buy more Bitcoin. The aim is to increase the Bitcoin per share for existing holders.
Got it.
Yeah.
So constantly issuing stock to buy more Bitcoin. That's a pretty striking term. So the Bitcoin side is clearly where the action is, but let's not forget their roots. How does their original software business actually function? What products do they offer today?
Sure. On the software side, their flagship is the Strategy One platform. This is a comprehensive business intelligence, or BI, tool for enterprise clients.
Okay.
It integrates modern features like AI-powered insights for natural language queries, hyperintelligence, dossier for reporting, embedded analytics. It's also cloud-native, deployable on AWS, Azure, Google Cloud, or on-premise.
So standard BI stuff, but maybe not keeping pace.
Well, that's the thing. It's a recognized platform, but it's crucial to remember this part of the business has seen declining revenue recently.
Right. And on the digital asset side, beyond just accumulating Bitcoin, what service or value do they provide to investors? Why not just buy Bitcoin directly?
That's a key point. For investors, Strategy acts as a simple, regulated, and importantly, leveraged proxy for Bitcoin exposure.
Leveraged, okay.
Accessible through traditional brokerage accounts, so you don't need a crypto wallet or an exchange account.
Makes sense.
Yeah.
Easier access for some.
Plus, the company leverages its, 35-plus years of software expertise to explore and develop new Bitcoin-related applications. They aspire to become a true Bitcoin development company down the line.
Okay, so potentially more than just holding it. How does Strategy actually stack up in these two vastly different markets in terms of sheer scale?
Well, in the BI market, they are a recognized leader by Gartner, yes. Global customer base, $463.5 million in software revenue in 2024.
Okay, respectable but not huge.
But in the digital asset market, their scale is absolutely immense. Strategy holds 597,325 BTC.
597,000 Bitcoin.
Yes, that represents over 2.8% of the total 21 million Bitcoin supply. It makes them the largest corporate holder by far.
Wow.
And this massive Bitcoin dominance drives its staggering $122.1 billion market capitalization. That completely dwarfs its software revenue.
Okay, so that market cap is almost entirely the Bitcoin play then.
Overwhelmingly, yes.
So with all that in mind, what's their core value proposition now? It certainly isn't just intelligence everywhere anymore, is it?
No, not solely. Historically, that was for software. Now, their stated value proposition is a unique opportunity for long-term value creation through a combination of software, the Bitcoin reserve, and innovation.
Right.
But for investors, the message is loud and clear. They offer highly leveraged, institutionally friendly exposure to Bitcoin.
Let's talk about the broader landscape. What are the market trends and growth potentials for these two wildly distinct industries?
Okay, the business intelligence market is mature but still growing, about an 8.9% compound annual growth rate, or CAGR, projected to reach over $63 billion by 2032.
So decent growth there.
Yeah, fueled by the data explosion, AI integration, the cloud shift, but it's a tailwind strategy hasn't fully capitalized on given their revenue trend.
Right. And the other side.
The digital asset market, particularly Bitcoin, well, that grows through adoption and price appreciation. It's driven by rising institutional interest, clearer regulatory environments, and that powerful digital gold narrative.
So Strategy's future is.
Without a doubt, overwhelmingly tied to Bitcoin's growth and price.
So they're playing in two wildly different arenas. Who are their biggest rivals in each? How do they compete against, say, Microsoft and BI or Bitcoin ETS on the crypto side?
Good question. In BI software, they face colossal competitors. Microsoft's Power BI, Salesforce's Tableau, Google's Looker. These are formidable opponents with huge resources.
Tough competition.
Definitely. For Bitcoin exposure, competitors include miners like Marathon Digital, MARA, exchanges like Coinbase, COIN, and, crucially, the relatively new spot Bitcoin ETFs.
And the ETFs don't have the leverage, right?
Exactly. The ETFs offer direct Bitcoin exposure without Strategy's operational complexity or that built-in leverage from their debt structure.
Got it. What about regulations? Must be complex.
It's a patchwork. For software, you've got data privacy laws. For crypto, it's the SEC, CFTC, IRS, FinCEN, a whole alphabet soup. And a pivotal change is FASB's new rule, ASU 2023-08, starting in 2025. It allows fair value accounting for crypto.
Meaning?
Meaning Bitcoin's price fluctuations will now flow directly through their earnings statement. That adds another layer of volatility to their reported profits or losses.
Oof, okay. More volatility on the books. Are there significant barriers to entry for someone trying to copy Strategy, especially the Bitcoin Treasury part?
In DI software, yes. High development costs, brand building, customer switching costs are all hurdles.
Standard software stuff.
Right. In the Bitcoin Treasury space, though, the main barrier is Strategy's sheer scale and its unique, trusted access to capital markets. They've proven incredibly adept at raising billions, specifically for Bitcoin acquisition. Nobody else has really done it like them.
Right, that capital raising machine.
Right.
So what are Strategy's key competitive advantages then? What sets them apart?
Well, their brand is strong in both niches. BI, with the Gartner recognition, and crypto, where they're basically synonymous with corporate Bitcoin adoption.
True. They put it on the map for corporates.
They also have a unique cost advantage in capital allocation. They issue these low to 0% interest convertible bonds, effectively leveraging the volatility of their own stock, MSTR, to get cheap funding.
That's clever financial engineering.
Very. And there's this unconventional financial network effect. Their Bitcoin buying reduces the available supply, potentially boosting Bitcoin's price, which then attracts more investors to MSTR stock, allowing them to raise more capital for more Bitcoin. It's a cycle.
A potential positive feedback loop if Bitcoin keeps rising.
Exactly. But their most unique asset, really, is the 597,325 BTC Treasury itself.
Right.
Unparalleled in transparency and auditability for a public company, combined with that sophisticated financing.
Okay. Let's turn our attention now to Chapter 2, Management Evaluation. The Saylor Doctrine. At the very heart of Strategy is its co-founder and executive chairman, Michael Saylor. His track record is quite a roller coaster, wouldn't you say?
Absolutely. A roller coaster is a good way to put it. Saylor's entrepreneurial vision founded the company in '89, led to a successful IPO. But his most profound success, undoubtedly, is that August 2020 pivot to Bitcoin.
Right, that's when the stock really took off.
Exploded. Over 3,300% surge. He strategically shifted from CEO in August 2022 to focus entirely on this Bitcoin strategy as executive chairman.
Now, that pivot was certainly audacious, but his past isn't entirely spotless, is it? How do his previous legal issues and controversies impact his leadership and the company's reputation today?
Yeah, his history includes some serious issues. SEC charges back in 2000 for fraudulent reporting, a $40 million tax fraud settlement just last year in 2024, and some criticism regarding his COVID-19 pandemic leadership.
So a mixed bag.
Definitely. Saylor is undeniably a masterful, charismatic communicator, vital to selling the Bitcoin strategy. But recent events like that May 2025 class action lawsuit,
What's that about?
it alleges misleading statements about Bitcoin risks. That certainly challenges the perception of his transparency. These legal challenges mean investors really need to critically evaluate information coming from the company and from him.
Okay, noted. Let's talk about where strategy is putting its money. What does their capital allocation strategy look like? Is it just Bitcoin?
It is singularly laser-focused. Acquire and hold Bitcoin.
Nothing else.
Virtually no evidence of significant investment back into the software business. In fact, they've sold off other units in the past just to raise capital for Bitcoin.
Right.
All excess cash flow, all capital raised from debt and equity, including this ambitious 2121 plan to raise $42 billion by 2027, it's all funneled directly into Bitcoin.
$42 billion. Wow. And what about share buybacks or dividends for common shareholders? Are they getting anything back?
Nope. No share buybacks. No common stock dividend. Instead, they're in a state of perpetual share issuance, using those at the market, or ATM, offerings to sell stock and buy Bitcoin.
So dilution is the name of the game.
Essentially. The company calls it Bitcoin yield, the idea that Bitcoin per share increases. But that only works if Bitcoin's price appreciates faster than the dilution from new shares. It's a big if.
Right. A big bet on appreciation.
And they have, however, issued preferred stock, the STRD, STRK, STRF series. Those offer high fixed dividends, like 8–10%, to attract income-focused investors.
Okay, so preferred holders get income, common holders get Bitcoin exposure and hope.
Other structure.
Now, when we look at return on invested capital, ROIC, the numbers look awful. TTM ROIC of negative 19.82%. That's terrible. But you're saying traditional metrics just don't work here. What's the real story?
That's right. Traditional ROIC divides operating profit by invested capital. But Strategia's huge capital raises went into Bitcoin, a non-operating asset on their books.
Oh.
So the calculation becomes meaningless. It divorces the small, potentially negative software profit from this colossal capital base invested elsewhere. It just highlights how unconventional their financial structure is. Standard metrics break down.
Right. Doesn't fit the mold. Let's move into Chapter 3, Financial Analysis, Reading the Digital Tea Leaves. So what do the key financial metrics tell us? Even some are distorted. Let's start with market cap.
Okay. Strategy's market cap is approximately $122.1 billion, based on 280.96 million shares outstanding.
$122 billion, and that's up from
a monumental leap from its $1.44 billion market cap at the end of 2019, just before the pivot.
Wow, that directly shows the transformation into a Bitcoin proxy. But while that valuation has soared, how has the software business revenue trend been over the last 5 years? Has it benefited at all?
Not really. While the valuation soared, the core software business has actually seen a concerning decline. After a brief uptick in 2021, revenue has fallen for 3 straight years, a minus 6.6% decline in 2024, down to $463.5 million.
Minus 6.6%. Okay, so definitely weakening.
It highlights the increasing, almost total reliance on Bitcoin. The operational foundation is shrinking.
And what about profit margins? With Bitcoin's volatility and those new accounting rules, what does that look like?
Right. The software business's gross margin is respectable, 70.95% TTM, pretty standard for software.
Okay.
However, operating and net margins, wildly volatile, often deeply negative. This is largely due to those new fair value accounting rules for Bitcoin.
The mark-to-market swings.
Exactly. Those gains or losses flow right through the income statement. So the TTM net profit margin is a staggering 160.72%.
Minus 1,100%.
Yes. It's basically just reflecting Bitcoin's price swings, not the software business's health at all.
That's incredible. So with those kinds of margins, what does their free cash flow generation look like? Are they funding themselves?
No. The 5-year trend in free cash flow, FCF, is erratic. After being positive in 2020 and 2021, it collapsed to just $1 million in 2022 and then turned sharply negative in 2024, a cash burn of menacing $67 million.
Burning $67 million.
Which means the software business isn't generating enough cash to even fund itself, let alone buy Bitcoin. They are entirely dependent on external financing issuing stock and debt for the Bitcoin strategy.
Complete dependence on capital market.
Correct. And earnings consistency. Non-existent since the pivot. Extreme volatility, massive losses. Like a negative $16.49 per share loss just last quarter ending March 31st, 2025, makes traditional valuation impossible and just underscores the high-risk nature.
Okay, let's look at financial stability then. Debt-to-equity ratio, how leveraged are they really?
The reported debt-to-equity ratio looks seemingly modest at 24.3%. That's $8.1 billion in debt against $33.5 billion in equity.
Okay, doesn't sound too bad on the surface.
And this is but most of that equity is just the mark-to-market value of their Bitcoin.
Oh, right, volatile equity.
Exactly. A significant Bitcoin price drop would vaporize that equity number. And suddenly that $8.1 billion debt load looks far more burdensome. The ratio would spike dramatically.
So the reported ratio is kind of misleading depending on Bitcoin's price. What about the current ratio? Short-term health.
That's a more telling short-term indicator, I think. It was 0.66 as of March 31st, 2025.
0.6, below 1.
Yeah, a ratio below 1.0 is a significant warning sign. It means they lack liquid assets, cash, receivables to cover their short-term liabilities coming due.
That sounds precarious.
It is. It's a direct consequence of deploying nearly all capital into an illiquid asset like Bitcoin. It necessitates that constant access to new capital we talked about.
Makes sense. And just to reiterate, no common dividend investment thesis is pure capital appreciation.
Correct. Dividends only exist on those preferred stock series.
So, valuation. If you're a traditional investor, your head might be spinning. The old rule book is out. How do we even begin to value a company like this? PE is useless, right?
Absolutely useless. Traditional metrics like price to earnings are irrelevant here because of the volatile and often negative earnings. The recent TTM PE was negative 17.24. You can't compare it meaningfully to software giants or typical crypto peers. It's its own beast.
So how do we estimate its true value then? We have to turn to intrinsic valuation using some of the parts SOTP approach.
Exactly. A standard discounted cash flow, DCF, isn't feasible for the consolidated company. It just doesn't work. So we value the two businesses separately.
Okay, break it down.
The declining software business, it has minimal intrinsic value at this point, maybe $1 billion to $3 billion, generously.
So only 1–2% of the total market cap.
Roughly, yes. It's almost a rounding error in the big picture. The overwhelming primary value, as you'd expect, comes from the Bitcoin Treasury.
Right. And what's the raw value of their massive Bitcoin holdings? Let's put a number on it.
Okay. Strategy holds 597,325 BTC, with Bitcoin at $117,421 per coin as of our analysis date.
Okay.
The total market value of their Bitcoin holdings is approximately $70.1 billion.
$70.1 billion. But they have debt against that, right?
Correct. Subtracting their total debt of about $8.2 billion.
Okay.
The net asset value, or NAV, attributable to shareholders is roughly $61.9 billion.
$61.9 billion NEV. So what does this all mean when we compare that NAV to the current market cap of $122.1 billion? That's almost double.
It is. The current market capitalization implies a premium of over $60.2 billion. That's nearly 100% premium above the net market value of its assets.
100% premium. That's not just a little extra that's paying twice the price. What does that premium really represent in the market's eyes? Why pay that much?
That's the multi-billion-dollar question. This premium isn't arbitrary. It's the market's tangible valuation of Strategy's unique structure. It represents the value placed on the leverage, the institutional access, the perpetual accumulation strategy, and maybe Saylor's leadership or vision.
So it's the price for the Saylor strategy itself.
In large part, yes. Our educational intrinsic value estimate, based purely on that NAV plus maybe a modest premium for the structure, falls in the range of $250 to $350 per share.
$200 to $350. Compared to the current price of $434.58, that's significantly lower.
Significantly lower. It underscores just how much of the current price is based on factors beyond the tangible assets.
Okay, that sets the stage perfectly. Now let's explore Chapter 4, Market Sentiment, the voice of the street. What are Wall Street analysts saying about Strategy, especially with that kind of premium? Are they buying it?
Well, the consensus is surprisingly bullish on the surface. The average brokerage recommendation, ABR, is 1.38. Remember, 1 is strong buy, 5 is strong sell.
1.38 is very bullish.
It is. That comes from 11 strong buy ratings and 1 buy rating. 0 holds or sells among those analysts.
Interesting. But
this masks huge disagreement underneath. Price targets range wildly from a low of $175 per share.
wow, way below current price.
To a high of $650 per share.
Way above. So they're all over the place.
Exactly. These wide ranges strongly suggest analysts are really just making calls on Bitcoin's price, not deeply analyzing the company's fundamentals or the sustainability of that premium. The more quantitative Zacks rank gives MSTR #3, which is a hold, reflecting a lack of positive earnings estimate revisions. So a bit of a disconnect there.
Right. Analysts bullish, but maybe just on Bitcoin. How does the media portray strategy? Do they capture this complexity?
The media narrative is almost entirely tied to Bitcoin's price swings. It's very reactive.
So Bitcoin up, strategy good. Bitcoin down, strategy risky.
Pretty much. When Bitcoin rallies, it's hailed as a genius success story. When it falls, the focus immediately shifts to unrealized losses, the debt load, the leverage risks. The company's inclusion in the prestigious NASDAQ 100 index in late 2024 was seen as a big legitimizing event.
All right, more mainstream acceptance.
But then you have the ongoing investor class action lawsuit filed in May 2025, which has brought renewed scrutiny to its disclosures and risks. So it's a mix of validation and controversy.
Okay, what do market indicators like short interest tell us? Are people betting against this?
Oh, yes. Short interest is exceptionally high. 9.09% of the float is sold short.
9%, that's substantial.
Very substantial. It indicates a large number of bearish bets against the stock. This makes strategy a classic battleground stock, high conviction on both sides, and it creates potential for a short squeeze if the price runs up quickly.
Right, the shorts get forced to buy back. What about technicals? Momentum.
Technical indicators, however, are currently bullish. The share price of $434.58 is comfortably above both its 50-day simple moving average, the SMA, of $405.89 and its 200-day SMA of $386.92.
Okay, so trending up short and long term.
Correct. This suggests strong positive momentum and a confirmed long-term uptrend, technically speaking. It indicates that momentum-driven investors are currently in control, pushing the price higher despite the high short interest and fundamental questions.
Fascinating contrast. Fundamentals, shaky, premium huge, shorts active, but momentum is strong. Let's look at Chapter 5. Ownership structure. Who's at the table? Who actually owns strategy?
Institutional ownership is quite high at 59.8%, nearly 60%.
Okay, mostly institutions. Who?
It's a really interesting mix. You have the big passive index funds like Vanguard and BlackRock. They hold significant positions simply because MSTR is in the NASDAQ 100 and other indexes.
Right, you have to own it.
Then you also have very active hedge funds like Citadel and Jane Street. They seem to be using it to trade the extreme volatility, likely with sophisticated option strategies. Less about the long-term Bitcoin bet, more about the price swings.
So passive indexers and active traders. What about insider holdings, particularly Michael Saylor? How much skin does he have in the game, and how much control?
Insiders hold about 8.5% overall. But the key figure is Michael Saylor, through his Class B common stock, which has super voting rights.
The dual class structure.
Exactly. He controls approximately 45% of the company's voting power.
45%. So he basically calls the shots.
Undeniably, he has effective control over the company's strategic direction. Whatever he wants to do, happens.
Interesting. Is he buying or selling? Or other insiders?
Well, interestingly, there's a clear pattern of insider selling.
Oh, despite the bullish stance.
Yes. For example, the EVP and General Counsel sold over $13 million worth of shares just recently, on July 10, 2025. And Saylor himself has periodically sold shares that he received from stock options over the past couple of years.
So insiders are cashing out some stock while the company keeps buying Bitcoin.
It seems that way. It stands in potential contrast, let's say, to the company's stated never sell ethos for the Bitcoin Treasury. Insiders are selling their stock.
That's noteworthy. So ownership is highly concentrated, especially voting control with Saylor. What does that mean for the average public shareholder? Do they have any say?
Virtually none. With Saylor's 45% voting control via Class B shares, public shareholders have essentially zero influence over corporate governance or strategy.
So you're just along for the ride.
Precisely. You are, in essence, a passenger on a ship whose course is set entirely by a single unassailable captain, whether you like the destination or not.
Okay. Let's transition to Chapter 6, Risk Assessment, a comprehensive SWOT analysis. Strengths, weaknesses, opportunities, threats. Let's start with the strengths. What are strategy's core advantages?
Its greatest strength, hands down, is its unparalleled Bitcoin treasury. That 597,325 BTC holding. It's the largest, most transparent corporate stash out there.
Can't argue with that. What else?
Second, its innovative capital raising engine. They are incredibly adept at securing billions in low-cost capital, mostly through those convertible bonds, specifically to buy Bitcoin.
Right, the financial engineering.
And third, a strong brand in dual niches. They have recognition in business intelligence, sure, but more importantly now, they're the go-to leveraged Bitcoin proxy for many institutional and retail investors.
Okay, clear strengths. Now the weaknesses. What keeps you up at night if you're holding MSTR?
Number one is the extreme dependence on Bitcoin. The company's financial health, its stock price, its ability to service debt, it all hinges on Bitcoin's volatile price.
Total single asset risk, almost.
Pretty much. Second, the deteriorating core business. That software side with declining revenue and negative free cash flow is a drag. It's not supporting the Bitcoin habit.
Makes the Bitcoin bet even more critical.
Exactly. Third, high financial leverage. Around $8.2 billion in debt, coupled with that low liquidity, the current ratio of 0.66. That's a risky combination if access to capital markets tightens or Bitcoin drops sharply.
Definitely.
And finally, there's significant key man and reputational risk tied directly to Michael Saylor. His past legal issues, the ongoing lawsuit, his dominant control. It's all concentrated risk.
Right. The Saylor factor cuts both ways. What opportunities lie ahead for strategy? What's the upside potential?
The biggest opportunity, obviously, is the continued mainstream adoption of Bitcoin. If institutions, even nations, continue to embrace Bitcoin as a reserve asset or medium of exchange, Strategy's bet looks prescient.
That would validate the whole strategy.
Hugely. There's also theoretically growth potential in the BI and AI market if they could turn that software division around, though that seems unlikely given the focus.
A long shot, maybe.
Perhaps. And then there's a chance to develop new Bitcoin-based financial products, leveraging their expertise in Treasury, fulfilling that Bitcoin development company ambition.
Okay. Now, the external threats. What could derail this?
Adverse regulatory changes in crypto are always a major threat. Governments could crack down in ways that hurt Bitcoin's price or Strategy's ability to operate.
Crypto regulation is still uncertain globally.
Very. Then there's intense competition from the BI giants on the software side and increasingly from the Bitcoin ETFs offering simpler, unleveraged exposure.
Right. The ETFs are a direct alternative now.
And, of course, cybersecurity threats. Protecting nearly 600,000 Bitcoin is a massive security challenge. A major hack would be catastrophic.
Absolutely critical. How do broader macroeconomic factors like inflation and interest rates impact them?
Inflation could actually be a tailwind, potentially. It reinforces that digital gold narrative for Bitcoin as an inflation hedge.
Okay.
However, higher interest rates pose a direct threat. They increase the cost of capital for Strategy's debt-funded Bitcoin purchases. And higher rates can draw capital away from speculative assets like Bitcoin towards safer yields.
So higher rates are generally bad for the model.
Generally, yes. And here's a subtle one. Hypothetical U.S.-imposed tariffs of 2025, while not directly targeting software.
How would tariffs affect them?
Well, tariffs on imported hardware can increase IT project costs for businesses overall. This might cause companies to cut back on IT spending, including BI software. For Strategy's already struggling software business, this could just accelerate its decay and increase reliance on the even more volatile Bitcoin strategy. It's an indirect effect, but plausible.
Interesting. An indirect hit to the weak leg. Okay, finally, let's bring it all together in Chapter 7. Conclusion. A tale of two theses. So bottom line, what's the bull case for Strategy? Why buy this stock, especially at this premium?
The bull case is really a bold bet on a specific kind of digital future. Bulls see Strategy as the world's most effective Bitcoin acquisition vehicle. It offers unique, leveraged exposure that simple spot ETFs can't replicate.
The leverage is key for bulls.
Absolutely.
Yeah.
Led by a visionary founder, its sophisticated capital-raising machine continuously increases Bitcoin per share, amplifying returns in a rising crypto market. An investment here is a pure conviction buy on Bitcoin's long-term future as a global store of value, and on Saylor's Strategy being the best way to play it.
Okay, pure play, leveraged Bitcoin bet. Now, the bear case. Why stay away or even short it?
The bear case views Strategy as dangerously overvalued and extraordinarily risky. That massive premium, it's built on a declining, cash-burning software business.
The shaky foundation.
Exactly. The entire structure is precariously balanced on Bitcoin's volatile price and completely dependent on constant, easy access to capital markets. Bears see it fraught with key man risk from Saylor, unresolved legal issues, ethical questions around the insider selling, and just the sheer volatility.
Too many risks, too high a price.
It's seen as a speculative gamble that could collapse if Bitcoin falters, if interest rates spike, or if market confidence in this specific leveraged model simply wanes.
Okay, two very clear opposing views. Let's just restate our estimated intrinsic value range based on the assets.
Right. Our sum of the parts analysis suggested the software business value is minimal. The company's value is overwhelmingly derived from its Bitcoin treasury. With 597,325 BTC and about $8.2 billion in debt, the net asset value, NAV, is around $61.9 billion.
Mm-hmm.
Our educational intrinsic value estimate, even allowing for a modest premium for the unique structure, falls in the range of $250 to $350 per share.
So, final thoughts. What does this mean for the current share price of $434.58? How should listeners think about that huge gap?
Well, the current price trades at a significant premium, as we've established, to our NAV-based estimate. This isn't arbitrary, though. It is the market's tangible valuation of the bull case. It's the price investors are currently willing to pay for that specific package. Leveraged Bitcoin exposure, institutional access, the perpetual accumulation strategy, Saylor's leadership.
So the premium is the strategy, in a sense.
Exactly. An investment at this price is highly speculative. It's a forward-looking bet that this unique strategy will continue to command this substantial premium, and critically, that Bitcoin's price will appreciate dramatically enough to justify both the current price and that premium going forward. Your decision to invest hinges entirely on your conviction in that bullish, crypto-centric future and strategy's specific way of accessing it.
A very specific, high-conviction bet indeed. So what really stands out to you from this deep dive into strategy, for me, when you consider their audacious move to tie their fate so completely to Bitcoin, it raises a fascinating question. If this model somehow proves successful over the long term, could we actually see a future where other companies, maybe from totally different industries, adopt similar Bitcoin treasury strategies? Could this fundamentally reshape traditional corporate finance?
That's the really big picture question, isn't it? Will others follow Saylor's playbook if it works? It's certainly something to watch.
Definitely food for thought. We hope this deep dive gave you some incredible insights into strategy, ticker MSTR. If you enjoyed this analysis and want more in-depth looks at companies that matter, make sure to like and subscribe to the Stock Analytics AI YouTube channel.
Definitely helps us out.
And did you know that for just €4.99 a month, our members get priority deep dives on tickers? Over the next few months, we're covering all of the S&P 500 stocks, and members get exclusive priority access. If you want a one-off deep dive on a specific stock, just drop us a super thanks.
And please remember, this analysis was generated by an AI system purely for educational purposes. It should absolutely not be considered financial advice.
That's right. Please conduct your own research or consult with a qualified financial advisor before making any investment decisions.